the walk to Poland. I took the walk to Poland. I've been fiending like I'm keening, right around with a Caltech. If you mean it, baby girl, do you mean it? I've been leaning, baby girl, I've been leaning. Phone still ringing, battling all my demons. I've been fiending, yeah, girl, I've been fiending. Hope you love me, baby, I hope you mean it. Walk to Poland. I took the walk to Poland. I took the walk to Poland. What you fucking with that feel? In Poland. I took the walk to Poland. I took the walk to Poland. I took the walk to Poland. I've been fiending like I'm keening, right around with a Caltech. If you mean it, baby girl, do you mean it? I've been leaning, baby girl, I've been leaning. Phone still ringing, battling all my demons. I've been fiending, yeah, girl, I've been fiending. Hope you love me, baby, I hope you mean it. Walk to Poland. I took the walk to Poland. I took the walk to Poland. What you fucking with that feel? In Poland. I took the walk to Poland. I took the walk to Poland. I took the walk to Poland. I've been fiending like I'm keening, right around with a Caltech. If you mean it, baby girl, do you mean it? I've been leaning, baby girl, I've been leaning. Phone still ringing, battling all my demons. I've been fiending, yeah, girl, I've been fiending. Hope you love me, baby, I hope you mean it. Walk to Poland. I took the walk to Poland. I took the walk to Poland. What you fucking with that?
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 10th, 2023. And I'm looking at synthetics, not Bitcoin right now. And I'll tell you why in a second, but let's switch to Bitcoin. I'm expecting a bounce at this region. Let's zoom out for a second. For hourly, daily, right? I'm expecting a bounce here, okay, for a few reasons. And I've gone over this. I've gone over the reasons why I'm expecting a bounce yesterday in yesterday's stream, but I'm going to reiterate and recapitulate. Yeah, isn't that the full word? Recapitulate, that thesis, why it's a very high likelihood that we can expect a bounce from this region for Bitcoin. One of the reasons I was looking at synthetics is because I'm actually going to do some trading on air, live on air, because I need to make some entries, and obviously that is not on my timetable. It depends on what the price action does. So I'm looking to make some entries on air. So let's go back to the small time frames. Sorry. For 4 different assets. So I just did Blur this morning. And now I'm looking to get into another Litecoin trade. Long, obviously. I'm also looking to get into a synthetics trade, another one. And another, so Litecoin, synthetics, Dogecoin, another one, and Dent, another one, okay? And I'm going to go over, what I'm looking at, why I've got the alarm set the way I have them set, and why I want to take this. So, no need to worry. Got the alarm set. We're at the computer, so no problem. So let's go ahead with Bitcoin. All right. So why am I expecting a bounce here? So everything is so clear and obvious in retrospect. Don't you hate that? And so many times as an analyst, I'll look at it and I'm like, oh, no shit. Like, obviously, right? Look at all of this activity right here, okay? No need to turn on the volume range visible range volume profile, VPVR, VRVP, whatever you want to call it. No indicator necessary. You can just look in the recent past. This region has proven to be significant, okay? And what happened in January is that we just flew by. And what do we know about significant regions of resistance and support is that once you break them, you got to retest them, okay? So that's all this is, okay? So this is the number one reason why I'm expecting, maybe 1A, okay? Why I'm expecting a bounce at this region, because just look at all of this. And let's now zoom out a little more. Okay, let's actually stay on the daily and zoom out a little more. And let's see if we can't find any more confluence. And indeed, back here and all the way back here, this was resistance, right, for an all-time high. Back in 2018, this was a little bit of resistance on the way up, and obviously you blew by this all-time high, which proved to be resistance, probably some mathematical resistance. You come up and you blow through it, and you come back down to it. Okay, so this region is significant, and when we broke it, as we went below it during the bear market consolidation, we broke it. We have to retest it. That's what I believe this is. Okay, that's the first reason. Now, let's go back on the smaller time frames. Second reason I think we should get a bounce here is because mathematically it makes sense. What do I mean by that? I believe that this is more likely than not an impulse, right? In Prechter and Frost, right, the wave theory, you can read about how Bob Prechter discusses an Elliott wave impulse having the right look, quote unquote. It just looks like it. This looks like an impulse. It looks parabolic. It looks impulsive. Once you have an impulse, you look then for a retracement to respect the 0.618 Fibonacci retracement level, because wave 2 always respects the 0.618. Wave 4 definitely respects the 0.618. Wave 4 actually respects the 0.382. So you should not get a retracement beyond the 0.618 Fibonacci retracement level once you go into impulse. That's the second reason I'm expecting this to be a level of support. The third reason is the anatomy of the correction, okay? Remember, we were saying how, okay, maybe we have some sort, I wasn't able to read this. I was telling you guys, look, I can't read this impulse for shit. Like, I'm just going to assume it's going to just keep going and keep going and keep going and have some, funky intrawave corrections, because you all know on a really high time frame, my targets for Bitcoin are in the millions for this bull run, yeah? So I'm here enjoying January pump and saying, okay, well, I don't know when we're going to get a significant retracement, but maybe this is just some intrawave correction, sign of strength of a la Wyckoff, and then you break, okay? But no, we got a retracement. This retracement isn't so bad because, again, you're holding critical support, okay? It is not invalidating of this impulse, okay? And I think that's where my analysis differs from a lot of other people's analysis. A lot of people are talking 18K, a lot of people are talking 12K, 10K, and they're not seeing this as an impulse. They're just seeing this as, some sort of corrective wave, but I don't see that, okay? So the other reason number 4, that I think this is an impulse, not only does it look the part, but also, let's get rid of this, the timing works out, okay? If you follow my work, if you know Elliott wave theory, like in depth, you understand that there's a time component, and the time component dictates that wave 1 and 2 take approximately the same amount of time to form, okay? So here you see wave 1 took about 34 days, wave 2 took about 36 days, okay? Maybe 34 days, because now we're counting some kind of consolidation reversal, which on the smaller time frame is likely going on right now, right? Once you find support, you have to absorb the supply. That, if you're bullish, you have to absorb the supply and form an accumulation range before you leave that level of support, okay? So the timing just tells me, okay, this is likely a wave 1, wave 2 situation. Also, we know wave 2 comes typically between the 0.5 and the 6.8 Fibonacci retracement level. We are on the 0.5. So everything tells me that this is a wave 1, wave 2 situation, okay? This would be a minute wave 1, minute wave 2, okay? Because I'm saying that this bull market is the minor wave bull market. If you guys don't know what I'm talking about, very quickly, let's just look at my high time frame master plan, just so nobody's kind of left in the dark if you're new. And by the way, guys, I would be remiss if I didn't mention, if you're finding value, please like, share, and subscribe. Okay, so if you go on the weekly, you can see, like, I've counted Bitcoin since the beginning. And, in terms of Elliott wave, you can't just say wave 1, wave 2, wave 3, wave 4. You have to say what degree. So we have a cycle degree, a primary degree, intermediate, so on and so forth. So this right here is what I see. This purple wave right here is what I see us in. See, this was minor wave 1, minor wave 2. I see us in minor wave 3, going into minor wave 3. Okay, actually, I see this as being the beginning of minor wave 3. Okay, and so if this is the beginning of minor wave 3, the subset of a minor wave is a minute wave. So this would be called minute wave 1. Okay? Or part of minute wave 1. Okay? Okay, so that's reason number 4. Reason number 5. Okay, there are a lot of reasons I'm bullish. People think, some analysts just pull stuff out of their ass. Maybe some do. Okay, maybe some are just looking at indicators. Maybe some are just, not doing technical analysis and watching the news and, going on social media and seeing everybody complain about the Fed and interest rates and stuff like that. So they're bearish and they think, oh, it's got to drop. That's bad technical analysis, because it's not technical analysis. Technical analysis is looking at the charts and then trading the charts and finding and formulating theses based off of chart understandings, right? Whatever you have, it's got to be chart related. If you're bringing something else in, it's fine and well, but it's not technical analysis. If you're talking to me about, well, there's no way this can go up now because the Fed killed this run, that's not technical analysis. And, if that's how you do your analysis, then more power to you. But I don't do that. So people always tell me about how this can't happen or that can't happen because, you know, they heard this on C-SPAN and that. I don't care about that, to be honest. All I care about are these candles and, you know, my DXY and, you know, all that other stuff that I can chart, because I can measure that and I can interpret that to a decent amount, to a decent degree of precision. Okay, decent degree of precision, not perfect, but decent degree. Okay, the fifth. Are we on the fifth reason? Fifth or the sixth? I don't remember. Who cares? The next reason I'm really bullish. Okay, I gave the time component. I gave the price component. I gave the look component. The next reason. What was the next reason? Oh, yeah. Look at this. Okay, let's get rid of this. So the next reason I'm bullish is this. And I've talked about this before, right? These markets, there is something to be said about moon phases and the movement of markets. If you don't know about it, I welcome you, or I encourage you to go do your own homework, go online, go on Google, and search lunar phases and financial markets. Okay, and just read. There's good research, there's good data, right? There's actual data that statistically significantly, to a statistically significant degree, links market movements to moon phases. And specifically, the data shows since 1950, major local bottoms are formed on full moons. As you'll see, all of these are full moons. And here you see local bottoms. Okay, 0 to 3 days after a full moon, you should expect a local bottom. My own personal research has noticed, or my own personal research indicates that this is most effective in trending markets. Sideways market, you can see a little bit of that trend, you know, that correlation, but really the correlation jumps out at you in trending markets. And this is a trending market, right? Trending up. So we can see here, 0 to 3 days after a full moon, market goes up. 0 to 3 days after a full moon, market goes up. 0 to 3 days after the full moon, that's the other reason I'm bullish. The full moon was on the 7th. Today is the 10th. The 7th was the 0 day. The 8th is the 1st. The 9th is the 2nd. The 10th is the 3rd. Today is the day that we should start to see, on average, okay, this is all based on data and averages. On average, around 3 days, 0 to 3 days after that full moon, you should see a local bottom form and a subsequent move up in the market. So this is another reason why I'm expecting a local bottom, okay? There's a lot of reasons, and this is how I do my analysis. It doesn't always, you know, catch every little move, whatever, but you add enough of these, and you can get pretty accurate. And it's why, you know, people on Twitter last night, you know, jabbing at me and saying, oh my God, you missed this move, you got wrecked and stuff like that. It's like, no, I'm not actually, because I got in here. And so when the price went all the way up here and then retraced only 50% of what it did in January, guess what? I'm actually 50% richer than I was in January. I'm not underwater. I'm 50% richer. This is why I'm able to get into new positions here, because I'm up, okay? I've reshuffled, I've added some new ones, some got stopped out, but I got profits, right? And most people who are trading this trend should be well off despite this, okay? This, keep everything in perspective, was over the course of 2 weeks, 2 or so weeks, right? Yeah, about 2 weeks, a 20% move down. 2 weeks, 20%. Whereas here you got about 34 days and you went up by 50%. So, I mean, understand what the trend is, what the counter trend is. If people are celebrating the counter trend and missing the trend, they're trading backwards, quite literally, okay? But, you know, to each their own. But this first, the first correction in an Elliott wave is the second wave, and it's the deepest and it's the most intense, okay? If you can survive this, then you've made it, because it's the most intense. It's the one that goes the deepest. And actually, in Elliott wave theory, the first Elliott wave is typically called the disbelief rally, because most market participants don't really believe that the trend has changed from sideways to trending up. Okay? And so that is exactly what you felt in terms of the market, or the market sentiment, yeah? And then the second wave, and you can see all of this. Who says this? Steve Sinclair, I believe, in Elliott Waves Made Simple, I believe. Yes, I think it's Steve Sinclair. Okay, if you go look on Amazon, Steve Sinclair, Elliott Waves Made Simple, he explains all of this. The second wave is where people who didn't believe this feel like, yes, I told you this isn't a real rally. I told you we're not in a bull market. I told you that wasn't a trend. Now we go back to zero. And then the third wave is when they're like, oh shit, I guess they were right. This is a trend. Okay, so that's what we're going to. The third wave is where most market participants are in agreement and realize that the trend really has changed. So the pros realize this, because the pros can read the sideways price action. The pros. Some pros can't and choose not to, which is fine. And some pros wait for this before they start getting busy. Then they only trade the third wave, which is fine. But again, like I said, I personally like to read these sideways accumulations. Yes, it's a little more risky, but when I do catch that, you make quite a bit in that first wave. And even if you don't sell for that second wave, you're at least 40% richer, at least, right? Because this is at most a 60% move. Do you understand what I'm saying? Okay, all of this is not made up. It's basic Elliott wave theory. If you want to learn it, go find some books on it. There's a lot of great books on it. Not that many, but some. Okay, I don't know if there's like a lot of good books, but like there's the Wave Principle by Bob Proctor and H.A. Frost. There's Elliott Waves Made Simple by Steve Sinclair. I always refer people to that, especially when they're starting off. There's a lot of good resources to learn Elliott Wave, and if you learn it a little bit, don't be surprised if you can't really apply it and it doesn't make any difference in your trading and you can't read the charts. It's got to take your full attention and really careful examination of these markets to make sense of it, and then you can see it. And then when you're able to see it, then everything opens up. For instance, if I know some people who call themselves Elliottians, or like they say they mastered Elliott waves, they're counting this as a wave 1, wave 2, or something like that. Like you can't do goofy stuff like that when you've really studied it, right? Because there are certain rules, principles, guidelines that you have to meet before characterizing anything as a wave 1, wave 2. I talk about the time, I talk about the price relationships, all that stuff. So anyway, learn it well. That's my point. Learn it well, do your own research. If you don't, it's actually more dangerous. It's kind of like giving a kid a knife and saying, oh, cook a meal. It's like, in the right hands, a knife is great. You can chef beautiful meals. In the wrong hands, in the child's hands, they'll cut themselves. It's the same thing. If you see everything as impulse, then you're really going to screw yourself. Okay. Let's take a small break. Young Dasa says, okay, first, Amazing Videos of the World says, BTC 43K coming soon. And yes, I agree. I think 43K is coming soon, or something around there. Young Dasa says, Dean, we are going to bounce from here. It's a bear trap, final flush out. Yeah, I mean, yeah, people call it a bear trap, but it's just wave 2. But yes, in a sense, I agree. It's going to be a bear trap for most people who are bearish. And this is why even in we go down 6% or however much it was. Was it 10%? I don't even remember. But in 2 weeks, we went down 20%. I'm still bullish. Okay, there's a reason I'm still bullish. I'm still not done with all the reasons. Okay, guys, if you're getting value, please like, share, and subscribe. All right, my final reason why I'm bullish, and maybe you could say the most important reason, is this one right here. Look what happened on our favorite indicator, the DXY. People like to talk about the Fed and, watch C-SPAN and, talk about like, well, if inflation goes up this many basis points and then you do this and then people think it's going to go there, then you should have then a price of, the stocks and commodities. Like, come on, man. All of a sudden everybody has a fucking Nobel Prize in economics. Fuck out of here. Like, it's not that complicated. Everything is encompassed by the relative strength of the dollar as measured by the US dollar currency index. And this relationship that the US dollar currency index has to Bitcoin, risk on assets, to the stock markets, NASDAQ, S&P 500 can be charted. It's a fact. It can be charted. You can put it down on pen and paper. You don't have to, kind of do all of these, machinations and try to show everybody how much you know about the economy, right? Because it really is not that, it doesn't work that way, right? Because there's all these, well, if it goes there, that's not the reason it dumps. It's because people think it's going to go there, and because I know what people, it doesn't make any sense. But, alas, if you want to make this simple for you, and you want to find an effective way to see where the markets are likely to move, both the stock markets and crypto markets, right? Again, this doesn't tell you everything. It just tells you general direction, more or less, on a high time frame. Then look at the US dollar currency index, and this is why I keep using this on the channel. You don't see me using anything else. You don't see me using futures, ES futures. You don't see me talking about the basis points and when the Fed's going to talk next, all that stuff. It's not that important. The most important thing is if this DXY is going up and down, or up or down rather. And we identify this region as staunch resistance. This dotted line, 600 days worth of resistance, right? This magenta line is the baseline of this massive head and shoulders that we broke down from. And essentially, what we did was broke down and came back up to this line, right? You would have thought this was sufficient, but no. The DXY likes to dick around at these levels. So it broke down and came back to the scene of the crime, where finally it's now finding its way back down. Let's go on the smaller time frame, see what it looks like. As you can see, it's quite clear that this has the right look of an impulse, right? It's a straight ass line, and this was a lot of consolidation, drop. That should coincide with a similar impulse, but in the opposite way in risk on assets. So this is the final, but probably most important reason I'm bullish on Bitcoin at these levels. Okay, obviously I understand that the correlation is high time frame correlation, right? But it's likely that even on the smaller time frames, that this big move down coincide with the big move up in Bitcoin and crypto. Okay, now let's look at this on a even smaller time frame. If this is indeed a let's see. It's hard to say exactly what this is. Is this a wave 3 maybe? Was this the wave 1 down up here? I don't know. It's so messy. You've got gaps and stuff like that. All I know is this. In any kind of impulse, the retracement should respect the 0618. So what I'm going to do is I'm going to take a Fibonacci retracement tool from the top to the bottom. And this can go up, okay? And I expect it to find resistance at this mathematical resistance level right there. Start to turn around and then continue down. Okay, this is where a lot of crypto assets will start to go. Okay, it's Friday. This isn't going to pump or trade for much longer, right? Because this US dollar currency index, essentially, it doesn't have time, right? It's not like a thing, but it's based off of, the US dollar, so the stock market, the US stock market, and a basket of foreign currencies, 6. So the Swedish franc, or the Swedish franc, or what is it? I think it's the Swedish franc, the French franc, the Swedish, the Swedish kroner, the Swiss franc, the French franc, the British pound, the Canadian dollar, and the Japanese yen. There we go. Those 6. So whenever those are trading, the DXY is also trading. That's why the DXY has the hours it has. So it's basically, trading whenever those things are trading. And mainly when the US dollar is trading on the stock market. So you can expect this to continue for the rest of the day, right? For a few more hours, and then stop, and then probably gap down and go up and stuff like that. So in any case, maybe Sunday evening we get our big move. Maybe Monday or something like that. But essentially we're really close because this was the big wave out. This seems like a type of wave 2. If I just look, I see 1, 2, 3, 1, 2, 3, 4. Yeah, I don't know if this is that may be it. That may be it. We may have this turning around sooner than later, just because if this is a wave 1, wave 2 situation, I'm counting about 1, 2, 3, 4, 1, 2, 3, 4, 4 hours down, 4 hours up. So that's what I'm expecting on a smaller time frame. So let's just zoom in really quickly. Here you can see the anatomy of this retracement is A, B, C. So it's like a zigzag, okay? So it's a zigzag, and zigzags are 5 waves up, 3 waves down, 5 waves up. That looks like it's going to find resistance in this area. So I would expect for our risk-on assets to start moving here. Our stochastic RSI momentum indicator is showing us that it's exhausted. It's overbought on the 15-minute time frame. So this is my main indicator. That's why it's my main indicator. You don't need anything else, but by all means, if the competition, and because it's a zero-sum game, everybody wants to make money trading, but some people have to win and other people have to lose. If other people want to make it more complicated, by all means, go ahead. Okay. Back to Bitcoin and back to crypto. So I'm looking at this, and on the smaller time frame, so I gave you 6 reasons why I'm bullish. 6 reasons why I'm bullish, okay? That's me, everybody's going to do whatever they do. Obviously, everything's a risk. This is all probabilistic. I don't know anything for sure, for 100%, but I'm trading it. I'm trading a lot of money on that thesis, okay? I'm basing a lot of money on that thesis that, we should be going long sooner than later, okay? So this is why I'm currently looking for more longs, more. Okay, so what I'm seeing on smaller time frames is, like I said, we're likely basing, okay? And it's not an accident that we're basing at the 20K level. Yeah, I didn't see it, but you can't kick yourself forever. You do your best and you live with the results. So now that we're here, this seems like a relatively strong level of support and a likely level of support. So I'm looking for a consolidation pattern. And here I see a wave 4 and wave 5. I think this is the final wave 5, the capitulative candle right here. I like the fact that you have a big bullish sort of wick showing strong support in this region. Okay, and then my first wave, my A wave, is a 3-wave move up, targeting that wave 4 of the previous trend. So I've got my A wave, and I've got my B wave likely here. So that's my big A, big B, okay? Or, actually, sorry, I thought about this. I'm thinking. A few things could be... so earlier this morning, I was thinking this is wave 4, but this is an ending diagonal. Let's entertain that for a second. I don't like that I don't like that much, because then if this was the ending diagonal, then we're looking for 3, 3, 3, 3, 3, and I don't see very clearly how this is 3 waves, 3 waves, 3 waves. No, I don't see that. I don't see that. I like my original idea. This is the capitulative wave 5. This is wave 4. I could be wrong, but let's just count it like that right now. These counts of A/B basing are dynamic. So I say this is my first. This is my counter. So that's my big A. That's my big B. This is my small A, or my secondary A wave. This is my small B, probably. And maybe a pivot here, or maybe the pivot's coming. But anyway, I'm seeing a consolidation reversal channel right here, or rounded bottom, as some people would call it. Let's turn on our momentum indicator. On the momentum, it looks like we are about to cross bullish, but without any notable... Actually, I don't see any bullish divergence here, right? Actually, I see bearish divergence. I think we're going to come down a little more, right? Because the momentum indicator shows that here you have a higher low, here you have a lower low, so it's likely to come lower here. That would make sense, because if you look at this in terms of a secondary A wave right here, you want your secondary B wave to reach the 0786, and I believe that this is the secondary B wave right here. This compound, boom, boom, boom. Maybe it's not finished yet. Something like this. Maybe it's a running flat. I don't know. Maybe this is the pivot. Maybe. We're going to look at this carefully. Look at the hourly time frame. Hourly time frame, when trends happen, it's hard to say, the momentum indicators don't always tell you exactly what's going on. Sometimes they coil like this, right? That's basically showing strength, because you're staying overbought. That's fine. That doesn't tell us anything in particular. 4-hourly time frame, it's completely oversold. Daily, obviously oversold. Let's go back to the 15. Okay, about to cross bullish. Go to the 5, about to cross bullish. I don't know. It looks good. You're actually getting bullish divergence on the 5-minute time frame. Okay, let's look at the ones I was looking to get in on. Okay, let's first look at Blur. What's it doing? It's starting to wake up. I traded this already because it hit my alarm, because I'm seeing a double zigzag. So 5 waves up, 3 waves down, 5 waves up, 3 waves down. It hit the minimum 0.5, right? The zigzag has to hit the minimum 0.5, so I got in. And I set my stops below the 618, right? Dent is the other one I want to get in. Not yet. Haven't gotten into it yet. What do I see? I have the alarm set here because I was under the impression that this was a sort of 5 waves up, 3 waves down situation. But it looks like we're getting a strong move here. Let me check on the 15-minute time frame. Yeah, we're getting a strong move here. Okay, let's look at Doge. Doge as well. Everything's looking good, guys. Everything's looking good. Litecoin, everything looks like it's about to pump. Okay, I'm gonna do this right now. I'm gonna do this right now because I feel like we're gonna get a big move here, and if not, I'm just gonna get out and look for lower. Okay, let me just look at this for a second. See. I don't want to be too hasty. Yeah, you hit the 0.5. This may have been a zigzag. Alright, let's go. I'm going to do this now. On screen with you. Okay, first Litecoin. Okay. Okay, Litecoin. Okay. Okay, and then the next one is Doge. Everything's looking really good, guys. Okay, let's go back. Okay, next one, synthetics. Yeah, that looks really good. I'm gonna talk about these in a second, so just give me a second. I'm just entering my trades now. I'm gonna talk about why I've decided to take them, and why, even though my trading plan didn't do what I thought it would in my trading plan, I'm still taking the trade. I'm gonna talk about that and how that always happens, because you know you can. Let me just shut up and focus real quick. Okay, and then the last one was synthetics, Dent, Doge, synthetics, Litecoin. Dent. Okay, let me see, Dent. Yeah, that's also looking really good. Okay, okay, now let me add some margin, and here I would do 837. Okay, Litecoin. And then Dent, Doge, Litecoin, and synthetics here. Okay, so I'm almost finished. I'm just adding margin and protecting against potential downside. But yeah, this is looking really good, and I'm gonna tell you guys in a second why that is. Okay. So first, let's start with synthetics. I don't do live trading just because I think it's, you know, there's no need. As you guys know, like, I'm very I can't do two things at once. So if I'm trading, I'm totally focused on my trade. Let's see. I want to be around 213.5. 213.5. this is looking really, really, really good. This looked like it was a triangle. That's really bullish. That's really bullish. 6393. So Dogecoin 6393. Okay, Dogecoin, dent. Did I already do dent? Let's see. Yeah, this is, let's see, dent would be okay, let me set my stops. Okay, and then the next one. Almost done. And then the next one, Litecoin, 6, 9, 8. And then the next one would be synthetics. Okay. All right. Let's see how this plays out. Okay, the reason I took these trades, and first let me just say, I'm taking leverage trades. If you haven't been trading, you're not like really careful, there's no reason to do leverage unless you're actively trying to learn leverage. Don't do that. There's no reason to. Just buy spot. It's risky, and it, you can get stopped out easily and lose a lot of money. It's not worth it. I'm looking at this again. Okay, why did I take those? Because everything was looking really bullish, especially on this time frame here, on the 15-minute time frame. Now, on the even smaller time frame, it still kind of looks bullish. I see this as a pivot right here. You go up in 3 waves, you come down in 3 waves, you consolidate a little bit. You're likely to get a move up like that, okay? So that's what I'm seeing with Bitcoin, and that kind of led me to believe, okay, well, if Bitcoin's bullish, then these others are going to be bullish as well. So then I looked at Blur, I saw you go up, you come down, that's my pair of corrective waves, and I start to make my way up, okay? So that is kind of an impulsive wave that's forming, and my 15-minute stochastic RSI is oversold. Now, I didn't trade those, I'm trading these, so why am I interested in this? In taking these trades? Well, one, as we're going up, the momentum's coming down. That's really, really bullish. Like, you don't get that typically. in, when a move is going to come back down. Typically, when the move's going to come back down, the price goes up, the momentum goes up as well. So then you expect the move down. But when your price action is super bullish, sometimes you make these kinds of moves, which I would say are less common than they're less common. You don't see them all the time. And so that's why I had my alarm down here, because I was seeing this as a 5-wave move up and a 3-wave move down to potentially then put in a zigzag. But this may very well be an impulse. Let's see. Let's zoom out for a second. See what the hell this may be. Okay. So just looking at debt here, you may be putting in an impulse that will take you all the way up here at the very least before you start making retracements back down, right, in another kind of counter correction. That's what it's looking like to me. It's looking like the thing that really sold me on taking the long right there is price going up, momentum coming down. So I don't see why the price would stop going up. Okay, on the smaller time frames, originally before we started the show, I was seeing this as being a distribution of some sort, which would probably take the price down. That still can happen, but I don't know anymore. Okay, let's look at Dogecoin. It still can happen. It's tricky. Yeah, I don't know. In both cases here, your momentum is trending down as price goes up. That's really bullish. Let's see, what's Litecoin doing and Synthetics doing? So Litecoin also, yeah. Question is, are you at a local top here? This doesn't look so bullish right now. It's the tough thing about these small time frames sometimes. So this to me looked like an A wave, right? A corrective pattern. So I'm looking for the counter correction. If you get the correction, you know that every correction has a counter correction. Every A wave has a B wave. So I'm looking for the B wave, and here I saw this and this. I'm thinking, oh, this is probably going to do something like this. Okay, it may still, but that's what I was looking for. That's why I have the alarm here, and the alarm is basically at the 786 of this move right here. So that was my reasoning for setting that alarm. And why did I get in? I got in because everything started to look so bullish on the smaller time frames. But it may just be doing something like this. Okay, that may be still happening. Let's see. I just don't know. Like, this dent looks so bullish because that momentum's really coming down and the price is just going up. It doesn't seem to me like this level is looking to be lost. If anything, it's consolidating at resistance for me. Dogecoin. Yeah, this is a wait and see thing. I'm just gonna wait and see. I've taken the risk, taken the trade, and now wait and see. Also for synthetics, what made me want to get into that trade was the fact that you went up in a corrective way. This is very clearly an A wave, a corrective pattern, and this is at least part of a counter correction. Okay, now the question is this finished, or is this what you're looking for? Okay, so when I saw this right here, I was like, uh-oh, maybe this is B, this is a small a or A2, whatever, and this is B2, because my momentum is telling me we're ready to go at this point. That's why I got into synthetics. Okay, I hope that explains my actions. Now let's see. I'm just gonna watch these for the rest of the stream, and I mean, so far so good. We're not being moved against. Everything's up. And this, to me, when I see this on the small time frames, I see some sort of triangle. No, it's not triangle. It looks like a rising wedge. Let's see. Let's go smaller time frames. Yeah, even on the smaller time frames, you're consolidating down here. I just yeah, let's see. Oops, that's not what I meant. Okay, so yeah. Tricky. Very tricky. But here, when I'm looking at Cardano, I think this is a great example of why we're likely to get a move sooner than later, at least in the immediate short term, because you can see here, whatever this is, if it's a wave 4 and then into a wave 5, or if it's an A wave and a B wave, whatever this is, you came up impulsively and then you came down with 3 waves, and you're kind of finding support on that previous resistance. Okay, you passed this level right here, and then you're retesting it right here. So that, to me, if I see that in Cardano, it tells me, okay, it's likely that in other assets we also get some sort of move up. Wouldn't surprise me, you see. Like, everything's kind of looking, at least on the immediate short term, in the small time frames, Like we might get a move up, and that move up may take you up and out of this range, especially since on the 15-minute time frame, you're completely bottoming out as you go up. Do you know what I mean? And as a trader, what I want to do is scalp my entry, and if I'm successful, it'll leave the range in which I entered, right? Whether I'm going up or down, right? I just so happen to be going up, right? I'm longing, but if I'm successful, I scalp the entry somewhere here, and then we go out of this range impulsively, and then I know that whatever happens, I can control the downside quite easily because, you know, I see an impulse, I just put my stop and liquidation behind the 0618 or take profit behind the 0618. And I don't have to worry about staying in kind of this region and experiencing more volatility there, right? To get potentially stopped out, because that's what you want to avoid, obviously. But so that was the reasoning here. So I'm looking especially at dense. So Doge seems to be putting in, I don't know what it's doing. I don't know what it's doing. Let's get rid of this. It's tricky. I'm going to watch it. Won't be surprised if we get a move up and out, right? Especially with that 15-minute time frame, although I do not like the fact there's no bullish divergence on the 15, but the 5 did show bullish divergence. But that played out here, right? And that may continue to play out here. So, guys, that's pretty much it. I mean, you know, there's not much to talk about today except Bitcoin, DXY, whether we're finding support or not. And that's what I see. And the altcoins, obviously, if we're going to find support in Bitcoin, we're going to find support in the altcoins. So I'd look out for that as well. If, you know, you're looking to take some trades or whatever, you know, the altcoin should also find support, and actually sooner than Bitcoin. So this is the last thing I'll say. If you just look at the altcoins on a high time frame, you can see a lot of them put in a wave 1, wave 2 situation as well. Cardano is a good example. You see that we found support right at the 618 area, and that is in confluence with the midline of this channel. With Algorand, it's a little different. This is clearly a flat correction, so retracement to the 786. Also, Arweave, flat correction, retracement to the 786. So you came down a lot more. Audio, this is likely a wave 1, wave 2 situation, or is it? No. This is likely a zigzag, being that it took way longer to come up than it did to come down, okay? So the time just doesn't fit for a wave 1, wave 2 situation, but, you know, you made the minimum 0.5 Fibonacci retracement, so that is a zigzag that has run its course in terms of the A wave and the B wave. Now it just has to put in the C wave. Blur, there's nothing much to see here. Also with what's it called? Bonk. There's not much to see. Dent we talked about, but this is a flat correction, right? You can see that we came down to the 786. Dodo, this is it's got to be a zigzag, right? It's got to be a zigzag because yeah, the correction took way less time than the move up. Okay, and then we came and found support right on that bear market accumulation. Dogecoin, a flat correction. This is one of the few that retraced almost 100% of what you did in January. Okay, one of the few. So yeah, if you're getting Dogecoin, it's basically a great opportunity to get in if you hadn't already. You can see DOT is pretty much already moving up, from that 0618. It's probably going to be one of the first movers given what it's done already here. DYDX, that's probably a wave 1, wave 2 situation. You hit the 0.5, or is it a wave 1? No, probably a zigzag, because just eyeballing it, looks like the retracement took way longer than the move up. But you hit the obligatory 0.5 Fibonacci retracement level. ETH, that's a wave 1, wave 2 situation. We measured it yesterday, finding support in the golden pocket between 0.5 and 618. Chainlink, that's a flat correction, okay? Flat correction, tag the 786. Okay, Litentry, I think this is another zigzag, but you came all the way to the 618. Okay, Litecoin is in a flat correction. Okay, this is tagging the 786 almost to the penny, as you can see right here. Okay, MOVR, I think that's a wave 1, wave 2 situation, believe it or not. But you can see 5 waves up, 3 waves down to the golden pocket. Harmony 1, I think this is another wave 1, wave 2 situation, down to the golden pocket, finding support. So you can see this throughout the altcoin market. Either you get, most of them are in a wave 1, wave 2 situation or a zigzag, and then others are in a flat correction. And other than like Dogecoin, at least on this watch list, whatever you gained in January, you didn't give back in February and March. So, trading the trend does pay. SHIB, same thing. Synthetics, yeah. Telcoin, this has just been chilling. This is the definition of a. This is another really good, strong reason why we're in a bull market. When you see these kinds of assets, these small cap coins serve so well. All of that volatility, and Telcoin basically just kept its consolidation range at its resistance, right? Consolidating at resistance the whole time. So all that happened, Telcoin just went up and down and up and down and up and down in a well-defined range, right? And this is a small cap altcoin, but you don't see that in a bear market. You only see that in a bull market. Okay, Theta, this is also one that's probably going to start moving sooner than later. You can already see that happening, right? Remember, altcoins in a bull market front run Bitcoin. So even if we think Bitcoin's going to run on Friday, Monday, Sunday, whatever, Sunday night, these altcoins may run sooner than that. Tron, this is likely a wave 1, wave 2 situation. Okay, VeChain, same wave 1, wave 2 situation. No. This is a zigzag. The time component just doesn't favor a wave 1, wave 2 situation. With XRP, this is a zigzag. It just looks a little funky. It's a bull flag. It's a flagpole and then a pennant or a flag right here. This whole channel is a flag. It's a downtrending channel. So that's consolidation at resistance. Zilliqa, another perfect retest of the golden pocket. This is why I'm bullish. This is why I've been bullish, right? For people who think that we're going much lower, all that stuff, like, you're not reading the charts. Like, all of these high time frame resistances have been retested. If you really want to know the character of a move, you look at its retests. And the bullish retest, the most bullish retest possible, is a retest of high time frame resistance as support. All right, guys, that's all from me. I hope that was helpful. Hope that was useful. Please like the video if you haven't yet. Share and subscribe if you haven't yet. And I will see you on Monday. Or no, I'll see you tomorrow, Saturday. I do give an update on Saturday. Amit says, possibility-wise, we are in a 5-wave move downside. I think from June low, we created an expanded flat from a connector and need a partner leg for downside. I mentioned this idea in one of your past videos. And Amit says, in my opinion, the price range from the June low is not an accumulation, but redistribution. Well, Amit, none of that coincides with like, that's a theory, but it has to be supported on a higher time frame. So if you have a higher time frame kind of analysis of Bitcoin, where you see all of a sudden, for the first time in 14 years, we start making we start breaking these patterns, right? These high time frame patterns, then fine. But it just doesn't make any sense for this to be redistribution, given the time, given so many things, right? Very quickly, the time it took to come up in this minor wave 1, the time it took to come down in this minor wave 2, the idea of this being redistribution would completely break everything, which means that then you're dealing with this as being your correction, which makes no sense, because what does that correct? This? Is that your theory? That this is the correction here, and this is not finished yet, right? Does that make sense? Like, I don't understand. Like, you'd have to make that make sense on a much higher time frame in context of everything Bitcoin's done. And it's possible, but I just don't see it. Like, if I'm taking the time we took in this intermediate wave 1, right? It's approximately 840 days. The time it takes for this, if this is what you're saying, look, I mean, it just doesn't make sense. This is already, it's been 1900 days. So in no way, if you're saying that this is one contiguous move, I don't know if that's what you're saying, but I think that's the only way a redistribution would make sense here, if that were somehow related to this, but that doesn't make sense. Again, 800 days, 1900 days, like, it doesn't fit. It doesn't fit, okay? And, you know, I always say, use a higher time frame analysis to inform the smaller time frames. On the smaller time frame, it's very likely, and also, just, there's so many things. There's the on-chain analysis. You can go on, you know, you look at the MVRV scored, the R hodl wave, the Tralolo, like, all of these metrics are telling us that we are bottomed in some way, shape, or form. We are bottomed. It's not a question of if this is a redistribution and we have 2 more years or however much longer to consolidate before moving back up, but it's a question of, okay, is this the actual bottom, or are we getting like a move a few $1,000s down or something like that? Do you understand what I mean? Like, I think there's enough data for us to conclusively say with a high degree of probability that this is a likely bottom. So Amit says, if the high time frame count you was right, yeah, you are correct. However, in my opinion, we created the cycle wave top for wave 3. What wave 3, Amit? You got to give me a degree. And we are in a cycle wave 4 correction. Okay, you're saying cycle wave 4. Okay, cycle wave top for wave 3. That's what you meant. Okay, cycle. I didn't count it as 1-2-1-2 setup. Okay, I don't subscribe to the 1-2-1-2 thing. If you follow my work, you know that in my estimation, wave 1, wave 2 retraces wave 1 only to the 618. If it goes anywhere below that, it's not a wave 2, it's a B wave. I know Elliott Wave International folks think that wave 2 can correct beyond the 618. I just disagree. So yeah, cycle wave 3, he's saying. Dude, how can we be in cycle wave 3? Yeah, we are in cycle wave 3. That's what I count as well. Yeah, cycle wave 3. So let me just entertain what Amit said real quick. He said, in the high time frame count, you right. No. However, in my opinion, we created the cycle wave top for 3. Cycle wave top. Yeah, I don't know. I mean, it's just, you know, tomato. I don't know how you're counting the cycle wave 3 top already. It doesn't make sense to me, because the cycle wave 3 top's not even close. It's not even close. Cycle wave 3 doesn't happen probably for maybe a year, maybe more, maybe a year, maybe a year or 2. Okay, and you can just calculate that quite easily, right? You know that wave 3 typically projects to between the 1618 and the 2 Fibonacci extension. So you take wave 1, wave 2, you should project wave 3 up there. We haven't even hit the 1618. So it's unlikely to, if we haven't hit the 1618, right? We know wave 3 extend to a minimum of 1 Fibonacci extension and an average of between the 1618 and the 2, and then obviously we can have extensions. But if you haven't hit the 1618, like, how are you counting the cycle wave 3 to be finished? Do you know what I'm saying? It's just, it doesn't fit with what we know. Do you see what I mean? Like, cycle wave 3, if you take this as wave 1, retracement of wave 2 right here, cycle wave 3 is all the way up here at around $1 million. Okay? Unless Bitcoin has hit $1 million and I didn't pay it and I didn't see it, like, cycle wave 3 can't even be close to hit. That's the 1618. Remember, that's the average extension for a wave 3. So again, I'm just using basic principles and guidelines to do this. Obviously, it's all probabilistic, but with a high degree of probability, this count is accurate. Yeah. So it says, I understand your opinion. My high time frame count is different. Yeah, that's fine. And I guess we'll see, right? We'll see. But yeah, thanks for sharing your views. And yeah, hopefully you're profitable. Yeah, that's all that counts at the end, right? We always want to be right, but you know, the more and more time passes, I don't care if I'm right or wrong. You know, I've been wrong, and I'll be wrong again. But what's important to me is, you know, my monetary goals with trading, right? Just, you know, earning a living and stuff like that. And that's all that matters at the end of the day. And obviously that goes along with being right more than wrong, right? Because if I'm wrong too much, then I'm obviously not very profitable. Okay, so that's pretty much it, guys. Yeah, definitely, like I said, like, share, and subscribe, and I will see you tomorrow. Take care.